Greetings. I'm Manu Walia from Continuum Global Asset Management, bringing you the market commentary on July 21st. More than a market commentary, I was prompted by a few headlines that I read yesterday and today in the journal that made me shake my head and think about how media plays an important role in day-to-day investing and how it messes with our emotions. Yesterday, one of the major economic news was about the U.S. housing market. The headline on the Wall Street Journal read, "Housing market stumbles." Okay, we understand that. The housing market's not doing that well and it's really hurting the economy. On the other hand, this morning there was news on the purchase applications for mortgages in the US, and the paragraph that Bloomberg.com had ended up by saying today's report, along with yesterday's rise of housing permits, are rare bits of good news for the housing sector. Well, let's look at how it translated into the market movement. Yesterday, the market fluctuated approximately 220 points. At one point in time, it was down 140 points, and then it ended up about 78 points. In other words, there was a market fluctuation, market value fluctuation of about $300 billion, about 2% of the market capitalization. How does a normal, ordinary investor, an individual investor, invest in an environment like that when you can have such huge fluctuations on a daily basis? Well, we believe that all investors are captive to their emotions, fear and greed. And I believe that fear is directly proportional to selfishness. The moment you see that there is some kind of uncertainty or negative news in the market, you or me or one investor would head for the exit. Now, obviously, if there are larger number of people who are investing in the market and there's more activity, that will translate into higher volatility. And that's what's been happening. This morning, the market started out positive, and the moment Mr. Bernanke started to talk and started talking about the job environment and the unemployment rates, the market lost about 100 points. So we believe that one has to come down to the fundamentals and the more important variables, like how is the world doing as an economic entity. I refuse to believe that with the burgeoning regions like the Latin American countries or Southeast Asian countries like Brazil, Russia, India, China, and the upper middle class of a few hundred million people in specifically areas like China and India, that there will not be a demand for products, from consumer products to more durable products like airplanes or cars, or smaller products like washing machines, DVD players, cell phones, and so on and so forth. So our belief is, because of this increasing consumer category in these countries, not only will there be domestic consumption, but countries like United States and parts of Europe will have an opportunity to export. And I reiterated that the U.S. nation, which is an industrialized nation, will have an ample opportunity to export to countries like India and China, Russia, Brazil, and so on and so forth, and really, really do well going forward. This is not the internet age where the dot-com only improved the medium of communication. This is an era where there is a larger number of consumers, hence the larger demand for different products. Now, I'm going to stop by saying that companies like Boeing, which make consumer durable products like well, it's not even consumer durables, but durable products like airplanes and defense products, or on the other spectrum, a company like Yum Brands, which owns Kentucky Fried Chicken, Pizza Hut, and Taco Bell, and their growth, both of these companies in different spectrums of the economy, will really see a burgeoning growth not only domestically but primarily in international arena. Now, if one can look beyond the day-to-day fluctuation and look at the real variables of how earnings are growing going forward, we believe that investors will be very, very well rewarded if they can invest in companies with global growth, catering to regions that we've mentioned again and again. Once again, if you have any questions, please visit our website or www.cgamadvisor.com, and we'll be happy to answer any questions you have. Once again, thanks for listening and happy trading.